Hey everyone, I'm Charting Man Dan with the chart guys. Overall, we had some morning volatility. We ended the day fairly flat, but some clear lead bulls like NVDA. Some uranium names still strong. Have the metals topped out temporarily. Let's look at the charts. So we had the S&P 500 futures chart in a daily stair-step pattern over the last 8 days. We broke that today, but no bear follow through at this point. Not even enough. Well, we got pretty close to hourly oversold. But bulls buying the dip. We did at one point today get all major sectors at the low of the day together. QQQ, XLF, XLV. For me, generally speaking, that's a notable signal knowing that we won't see any weakness in the market, bigger picture, unless that happens consistently for a number of days or for a number of weeks. In the most recent environment, which is obviously very bullish, over the last month or two, that signal has not had much bear follow through. That being said, it is still one of my rules. When I see that, I'm not playing long that day. And I know that my risk is leaving money on the table. For example, when that happened today around 11 a.m., here's the NASDAQ, down near the low, I said, I'm not scouting a bounce today. I know it hasn't followed through much, but I got to stick to my rules. And essentially what I'm doing is ensuring that when the market tops, whenever that is, and has a 10 to 20% pullback, maybe it's in months, whatever, I'm ensuring that I'm not going to give back much profit. And yes, maybe I leave a little bit of profit on the table because I'm not aggressively buying every dip, but I know that it's something that's going to ensure that, my account doesn't drop 5% with the market. And so I'm going to keep that conservative mindset. If I were looking to be aggressive, blue sky breakout, you keep buying every single dip until it stops working. And we did have a base of support here to go off of on the NASDAQ, which we held the low pre-market and ended up with another one of those V-shaped recoveries, that sucker punch style of pullback with no bigger picture follow through. The 15-minute was just a stair step up all morning, a stair step down on the drop, and then a nice recovery into the end of the day. So bigger picture, NASDAQ just fine, still hovering just under the all-time high in a potential little bull flag, and it was clearly NVDA leading the way. And I say that because Apple had a little bit of green as well, but for the most part, Amazon was red, Microsoft red, who else? Netflix was red at one point, ended up recovering, but on the morning everything was red, and I looked at NVDA and it's up a bunch. And so again, at this point, there's no red flags in the broader market. The bulls have full control. If we want to draw some short-term lines in the sand, let's use SPY and QQQ here. It's these levels. So 578.54 on SPY was a little higher low from last week. And for QQQ, it's 487.57. So if you want to be really clear, bears don't prove a thing if those levels are support. If we lose them, we zoom out and we watch the weekly trend. And again, this weekly trend's been the guide. Simple statement, if we're in a weekly uptrend, the bears are not proving anything bigger picture. But SMH, trying to set a daily high or low, its key support is the low of last week. But again, NVDA just head and shoulders above everybody else. There was a day last week when we broke 140 on Thursday, it was something like $420 million was bought in 2 seconds with just market orders because there was a huge amount of shares in the ask at 140. And it just got gobbled up. And it's just mind-blowing that it takes 2 seconds for hundreds of millions of dollars to be bought like that. And this daily inside bar bull break today can't have a stronger daily candle. Green Mara Bozu. And again, we're just back in, bull mode as long as we're in blue sky. And it's the kind of thing where, I looked at all major sectors at the low of the day together, and I looked at the NASDAQ weakness, and then I looked at NVDA and said, there are no red flags on this chart, and I know the importance of NVDA in the market as a whole, and we didn't lose 15-minute EMA 12 the whole day. And our later morning trade strategy after a name shows significant strength, you look for the 15-minute high or low off EMA 12, and I wasn't taking that trade because there was enough in the market for me to be cautious. But all that said, identify the lead bull. So for example, I was able to say NVDA is the lead bull general, and I just imagine a general on his horse leading the bulls, and it was doing it alone. 80% of the market was red today at a certain point. We know NVDA matters the most, but if NVDA does not fall off its bull horse, the bears are not going to follow through in a significant way. We would have had to have seen NVDA roll over and join weakness and head back to the low of the day if the NASDAQ bears were going to get anywhere. So it helps me significantly in the morning. Number one, our XLF and QQQ inverse. For the vast majority of today, yes, they were. And aside from that one point, when they did drop at the lows together, but on the initial start to the morning, they were inverse, and then in the afternoon, they were a bit inverse. But overall, that's one of the first things I'm looking to observe in the first 30 minutes of trading. And then I'm looking to identify who's a lead bull and who's a lead bear. Does the lead bull weaken and join the bears? Does the lead bear strengthen and join the bulls? And that helps as a clue as well. And again, at no point today did NVDA see any kind of meaningful weakness, which helped give the NASDAQ bulls some confidence. XLV, unable to confirm a daily uptrend at this point. Again, we're in monthly consolidation and we are scouting a monthly high or low. But it's a day where the NASDAQ's green, semiconductors are green, XLF and XLV are red. And again, remember those two pairings, they're very often inverse to each other in this bullish rotation market environment we've had all year. And so at this point, XLV is still consolidating. I'm keeping an eye on a bit of a channel that we've got going at this point, something like that. But again, I'm not trading the healthcare sector really ever. I'm just watching to see as a piece of the puzzle for the bigger picture of the broader market. XLF, daily consolidation underway after a stair step. Again, just a stair step pattern 8 days in a row. I do have a short on, and generally I'm not going to short blue sky breakout names, but if I have what I feel is an exhaustion gap up open on a name that's very due for daily consolidation, and I can put myself in a scenario where I know if I'm wrong or not very quickly, I make that attempt. And just looking back at, so it was Thursday, and it was because we gapped up open on Thursday, and I just grabbed some FAZ on the morning, and I was risking something like 10 cents. I grabbed it at 47.75, and it was this little 5-minute high or low, and if we broke to a new high of the day, I would have been out with an insignificant loss. Wouldn't have even registered as anything. And it was right here where I grabbed it, right around here. And I'm still in this position right now. I took a little bit of profit. You know, I've got a break-even stop above the all-time high, and this is now a hedge position. So I've got it in my IRA, and it's essentially, I'm going to keep holding this just in case we do top out more meaningfully. But again, there are no red flags here. I'll take a little bit more profit into daily EMA 12 support, but then I'll let some of it ride until I either stop out or we pull back meaningfully. And that's one of the ways that I stay protective in this market. You know, if you asked me on Wednesday, are you looking to short the financial sector? I'd say no, absolutely not. But I just saw a little short-term, very low-risk spot I can position. It turns into a swing because we close near the low of the day. That's how I navigate protecting a little bit in this market environment. Also the fact that, you know, I was feeling a little bit of euphoria last week as most of the accounts were hitting all-time highs, thanks to the bulls, thanks to the metal bulls, thanks to TCNNF in the cannabis sector. And so again, whenever I feel a little bit of euphoria, it's a automatic. I associate that emotion with be protective. Maybe take a little profit. Maybe look for a hedge. Because I know more often than not, that little bit of euphoria generally leads into a short-term account top. IWM was battling key 227.85 resistance to end last week. Failed, struggling, trying, and then today convincingly rolling over as a lead bear. So these are the two levels, bigger picture, I care the most about. But bears are still playing defense and keeping IWM contained. And again, I can't recall the last time I saw IWM with any strength that was not matched with XLF strength as well. In this market environment, to me it seems like IWM needs XLF strong. I mean, just look here, the big green day, Friday the 11th through Wednesday the 16th. What was XLF doing at that point in time? Friday the 11th, and we top out pretty much. I mean, it's just following out. For me, it's just a leveraged XLF at this point until something significantly changes. Uranium names, OKLO, still leading the way, just a beast, up 120, 140% in 5 days. I stopped trading it bullish today because at this point, for me to be comfortable, I have to look for an entry on back burners. I have to look for hourly oversold for a daily high or low or something like that. So again, being a little bit more conservative, I traded this name long a couple times last week, SMR a couple times last week. And at this point, the trade has to come back to me because I'm not comfortable longing up here until we get a little bit of consolidation. SMR not as strong. Daily inside bar today. CCJ, daily inside bar. Technically not by 7 pennies, but just watching for the potential of daily consolidation. And again, just being a little bit more conservative and waiting for the trade to come to me. The dollar is all bulls. This daily falling wedge, V-shape, and just grinding higher consistently. At this point, it's looking at previous support and now resistance. Look back here. Just look at how much this area has come into play. Where, we struggled a bit here. Some resistance, support, support, support. And now is this going to act as resistance again? Metals bulls sure hope so. The metals bulls are loving what they've been doing in the face of dollar strength. Question is, when do we get the dollar topping out into weekly consolidation now that we've V-shaped 50% of that drop? But overall, gold all-time high to end last week and today. Daily uptrend. Bigger picture, I've just been saying if weekly EMA 12 is support on gold, I'm bullish gold, silver, and miners. And that's been a nice guide. I've been focusing more on my swing trade with silver. I've had a position for months. And silver had the big, strong end of last week. It went straight up 7.5%. So we know consolidation's inevitable. But no red flags on the 4 hour at this point with this consolidation. Bulls are hoping 15-minute oversold marks the 4 hour high or low. That's a back burner. Miners, GDX hit new decade highs or whatever it is today. Tons of space for a daily high or low on these miners. So again, no red flags on them overall. And curious to see when the dollar does see weekly consolidation, do the metals get even another strong leg up? Or how does it play out from there? Oil, as I mentioned last week, I don't have an edge on what oil is doing. It's chopping sideways for a couple of months. It's very important. That's looking your ego in the mirror and saying, I don't know. And that is so okay as a trader. If you ask me, what is the most likely scenario on this chart? I do not know. And by admitting that to myself, I don't pretend and lie to myself like I have an edge and try and trade something that has a lack of clarity. So get good at saying, I don't know. Because that is something that I say constantly as a trader when I'm looking at charts. And if I don't know is the answer, I move on to the next one because I can find a chart where I think I know whatever the setup is. So get used to saying, I don't know. It's a very okay statement, especially in today's day and age where everybody knows everything about everything. I don't know. I didn't experience it. I wasn't there. I don't know what it was like. Anyways, that's how we're starting the week. Not very eventful. Again, for SPY to give me a red flag, let's go to futures. For the S&P 500 futures to give me a red flag, we need the NASDAQ to break that daily support, which would be struggling at all-time highs. But, I need over 50% retracement from this last leg up. And for S&P 500 futures, that means from where we closed right now, I need another 2% of downside to say, okay, things are shifting. Best case for bulls, so NVDA leading the way today. Apple's hovering just under all-time highs. Best case for bulls is for some of these big tech names to recover. Look at Microsoft, which has been notably weaker, but just a tightening range. Does this tightening range break bull or does it break bear, which is a weekly head and shoulders? So do some of the weaker big tech names join the bulls or do the stronger big tech names join the bears? And of course, we're going to look for an XLF daily high or low here eventually in the short term, but just one day at a time and making the bears prove it. Doing some protecting, grabbing some hedges, but show me weakness with follow through for multiple days. Where's the fear? I don't see any. If we're going to get a blow off top, like I've been talking about many times, I want to see IWM and NASDAQ at all-time highs together. That will really be shaping it up and have me confident that a blow off top is coming. But until then, one day at a time. Do good things. No end of the day content here. I put out a reflection video of my thoughts on the hurricane and my experiences, the things I did see with my own eyes that I do know, not speculating about things that I did not see and don't know. Hope you're well.